Well, Happy New Year to you. Thanks for joining us here in 2018 for the first trading day. I am Marlon Bowling with you, keeping an eye out for your ag trade. And we're going to be finding out what may be impacting our trade to make the very first trades of this brand new year. Of course, we had a long holiday weekend for traders to think about it, and here to talk about it, we bring in Rich Nelson of Allendale Incorporated in McHenry, Illinois, to talk about what may or may not occur here to start out the new trading year. How you doing there, Rich? Happy New Year.
Thank you so much. Happy New Year yourself here, guys.
All right. Well, let's kick things off here. We are going to be opening up our futures trade at the bottom of the hour here and looking at the grain markets as we headed into that long holiday break and we rolled over into a new calendar year. Of course, we had some position squaring, I heard, last week. Now that should all be done by now. What's going to happen here today? Do traders and large commodity funds put positions right back on again, or what happens here?
You know, typically they stay kind of quiet as far as a Tuesday and Wednesday reaction, but definitely by the end of the week they're usually getting back to normal. In terms of today's discussion, well, good news. The early call is for a 1 to 2 cent higher trade for both corn, soybeans, and in fact wheat as well here today.
Why?
Biggest issues for us right now, of course, on the wheat side, we're all talking about these very cold temperatures and the possibility of winter kill. Very valid discussion point there. And as far as the corn and soybeans, this Argentine forecast has actually dried up quite a bit for the next 7 days. They do show a lot of rain here for the week number 2, but for week 1 right here, looks like we get dry Argentina here.
Has there been any news as far as deliveries? Now, as of the January contract on soybeans, they did go into delivery mode before the end of the week and the end of the year here, but have you heard much in that regard?
You know, in terms of numbers, not enough that really got people excited. You know, for that first notice day here, as of delivery numbers on Friday, numbers actually quite light here, and same type of story here for right now. So no major overly bearish influence from this delivery discussion here.
So if we take a look at the technical factors on the charts, on the corn and the soybeans and the wheat here, when you look at these charts as we start out a new marketing year, what do you look at?
You know, one thing we're looking at right now is whether we can break some downtrends on the corn, for instance, or hold some support as far as the soybeans. One thing which is kind of interesting, and a lot of people have been pointing out, we actually have a very similar price to last year on the corn end at least, and last year, right about now, we started that transition towards higher prices. So that's something we're all kind of watching for. As of yet, certainly not in the cards here.
Okay, and as you look at the outside markets here, of course, we did not hit that 25,000 mark in the Dow last week before the end of the year here. So how much disappointment is that to the trade, or how much is that going to change the money flow in and out of the commodity sector here?
Yeah, I think that's something that a lot of people are already starting to talk about. In fact, we saw last week a story out of Bloomberg where they made some interesting comparisons against the commodity prices against the stock market. And one thing this comparison noted is it didn't suggest that we're already to turn around right now, but certainly we're at some extreme levels, which in previous years, perhaps we've seen this situation change here.
And one thing that I know you and I talked about last week is the fact that these export estimates, the yearly export estimates from USDA on the grains, they seem to be coming up short, well short, in the soybeans and the corn. Do you think that is something that they're going to have to modify when they come out with that major report on January 12th?
And that's a great discussion point here. So for the next few days, the entire industry will be talking about these numbers here. On the export side, I do agree that, yes, USDA will be having to lower corn and wheat exports a slight amount, certainly a bit more than that on soybeans. On the positive side, we can also kind of argue that this corn for ethanol story probably doing quite a bit better than what USDA's numbers currently suggest as well.
All right, Rich, if you can, I'll keep you around here through the break, and then we'll talk about the livestock trade as we get ready to open up our trading year of 2018 in just a few moments. Rich Nelson is our guest. He is with Allendale Incorporated. Don't go anywhere. We'll be right back. And we are back talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Just point of fact here, Rich, I know in the Nashville area here, I think the temperature was like 4 degrees this morning, and for Southerners, that's pretty chilly. But for relativity, let's talk about what it's like where you are there. What kind of weather are you looking at here this week?
We've got to drive in this morning about -9. I believe for today we might, in fact, we're going to hit up maybe back into the single digits. So we're pretty excited about that, I guess.
Single digits. Now, on a more serious note, the reason I bring that up is that cannot be good for livestock out there. That has got to be creating so much stress and really reducing the rate of gain out there on the cattle and the hogs. Is the market going to take that into account here today?
I think so. In fact, as we're looking here, of course, last week through this weekend were the significant problems here. And in fact, I'm looking right now at Amarillo, Texas, and heck, this Texas Panhandle at best might see some highs back into that 58 range here this week. So they're going to warm up quite a bit, maybe reverse some of the concern here. But there's no doubt there's been damage to this weight gain issue, and markets certainly need to reflect that here.
Well, anyone that has raised cattle knows that one of the worst things that you can do for cattle this time of year is to have it get exceptionally cold and then warm up real fast and then get really cold again, especially if they become wet in the process. That tends to be real hard on cattle herds.
Great point. And like you mentioned there also, if we had this involved with a snowstorm or some freezing rain, it'd certainly be a terrible situation on that end. Certainly true.
When we wrapped up last week, we have a livestock summary here, and admittedly, nothing was reported from USDA Friday afternoon for cash cattle trade because it happened so late in the day, and they put their afternoon updates out like at 2 or 3 o'clock, something like that. And we did hear through the grapevine that we had some sales established anywhere from Nebraska to Texas between 122 and 123 on a live basis. And we had a few sales reported on a dress basis there that started out around 193. It sounds like they ended up around 195. That would be several dollars higher than where we ended the week before. Wouldn't that be right?
It's certainly right. And so the previous week's average price would have been about 120. So good news as far as this point. Also, even better news, even with our higher levels of production right now, we ended 2017 with about a $5 premium over the end of 2016. So even more supplies and yet higher prices. So certainly good news as far as that discussion there.
Now, if we look at our beef cutout values that USDA did report on Friday afternoon, here's a look. They did increase. We had choice cuts up 62 cents. We had select cuts up 207 on Friday afternoon to wrap up the year. So that puts choice cuts at 202.90. That puts select cuts at 192.98. Now on the pork carcass cutout value side, it looks like on the cutouts we were 19 cents higher, wrapping up the year at 78.22. The belly market had a late hit right before the end of the year. It was down $2.84, settling at 110.03 per hundredweight. What kind of direction do you see here in the hog market today?
As far as hogs today, we're looking at more or less a mixed trade to start out. In terms of this next few weeks, keep in mind on a seasonal basis, this is typically not the best time of year as far as end users for procurement. Consumers are usually paying some bills during the month of January, so maybe a little tough as far as meat movement. But for today, I think we can certainly look for a slightly higher tone, maybe down 20 to up 30 or 40 for today's open here.
Well, Rich, as always, thanks for the advice as we get ready to open things up here. Can't wait to see how the markets establish themselves in the early going here on 2018. Rich Nelson is with Allendale Incorporated, and he is based in McHenry, Illinois. Janet, we're about 5.5 minutes away from kicking it off the brand new year.
See what things have in store as we get things started. Thanks. Mm-hmm.